Namaste and a very warm welcome to our channel, Rusty Traders. So, in this video of ours, I'm just going to share what kind of strategy I used today, being the budget day, and what all things I took care of. So, before wasting any time, let's start. So, what I've done here is I've taken the time with a 15-minute interval. This is the rate of Nifty cash at the end of that particular time interval. What I have is the premium of the 17,800 call. 3rd February is the expiry, right? That's a weekly expiry for Nifty. And I also have the Nifty 3rd February 17,200 put option. So these are the premiums and this is the total premium. All right. So we all knew that budget is a big event as far as the Indian economics and the stock market is concerned. So what all things does one need to take care of? As far as I am concerned, what I have seen is ahead of any big event, the market participants uh, see that there is an increase in volatility. But as soon as the event starts panning out, the volatility slowly subsides because now you have a clear idea of what all the event had to give and did not give. The expectation basically are sorted. So what I did was, we all knew that the honorable finance minister's speech was going to start at 11. So from 9:15 till 11, till the speech started, I did not do anything. I just sat there, and that is the most difficult thing, right? Because there are a lot of compulsive traders out there. So the first part of my trading strategy today on the budget day, 1st of February, was not to take a trade till the finance minister's speech started, because we all knew that as you near the event, right, there is an increase in the volatility. Yeah, sometimes there are a lot of people who will say that the straddles are there, so you can make use of it. Yeah, but it does not work all the time, because at some point in time the volatility will surely subside. You do not want to get caught at that particular point in time, because as we all know that the rates, the premium that you are getting were very, very high. So they were supposed to adjust at some point in time. So what I did was, I stayed away from taking any trade till 11 a.m. So I'll just debrief you. Okay, so as far as the timing from 9:30 to 11 a.m. are concerned, right, Nifty cash moved from, let's say, 17,513 here to 17,561. All right, so it's a band of almost 50 points. So on account of that, obviously, as there is a rise, the call price would also rise by what they rose by around 25, 20, 23, 20, 23 points. On the other side, the put option reduced by only 12 points. So that showed that the market participants were gearing up for the mega event. So I just stayed away from that. This kind of behavior is also visible on the day of the monetary policy. So I have burnt myself a lot of time, and that is why I stayed away from taking any trade till the finance minister started speaking. Once the event started, what I did was, I took a trade on the short side, which is 17,800 call was sold at 128.3. On the other side, 17,200 put option of equal quantity was also sold at 92.2, bagging a premium of 220.5. So which strategy is this? Yeah, it's obviously, you guessed it right. It's a short strangle. And I just took this trade bang on, because the way the markets opened and the way the markets were positioned, I just decided that I need to have a difference in strike price of around 300 rupees. So from 17,560, about 250 here, 250 350 there, and I just jolted down on a range of 300, and that is how I chose the strike. I backed a premium of 220.5, and I just rode the wave. If you see, starting 11:15, as the Honorable Finance Minister started speaking, 11:30 to 17.75, which is 218, 215, 210, again 210, 195, and then the big crack. Okay, big crack of almost 50 points. Now see, it is at 17,601. All right, Nifty cash, and Nifty cash after 15 minutes was 17,585, which is a drop of only 16 points. So in that case, yeah, the prices of call would fall. But then if you see, the price of put also fell. Why is it? Because the IV started dropping very, very rapidly. Can you imagine 35 points here and another 15 points here? Almost 50 points in a gap of 15 minutes. That's it. I did not have to do anything from 220 to 144. That's it. I was done. But then I still knew that there was, some more room to go, because the IVs were very, very high at 126. All right, I was there. So from 220 to 127, almost 100 points. All right, it's a whopping number, right? Then you had this big scare. If you see, right, the markets dropped very, very rapidly, almost a 300-point drop. Okay, 250-point drop, which cut my losses, I mean profits, by what, 40, 35, 35, 40 points. But I still knew that the IVs were giving me a substantial amount of room, and now that is where I kicked in my technical knowledge. All right, it is something very simple, all of you know, right? This is what happened, right? RSI went below 30, went above 30, it's a buy, and I just held on to my position, and this is the reason. Okay, if the markets had not recovered, then I would have booked my profits at 162, 172, whatever it was, because anyways 50 rupees is quite a huge number. All right, so this is the reason. All right, this is the dip that came. All right, so if you see, high of 17,444, this is a 5-minute chart, and low was around 268. In the next 5 minutes, the low of around 244 was made, close at 393, and RSI gave me a buy. I am going to share, you can also have a look at my video wherein I have to explain how to use the RSI. This gave me a buy setup, and I just held on to my position again. I did not close them, right? So because of this, just because of this, I stayed. I did not close my position here. All right, and I just stayed there, and then rest is history. I closed probably my position, or somebody else would have, if anybody was. And let's talk about a trader who took this particular trades. They followed this kind of trade setup. He just stayed there. All right, let's say he closed his position at, let's say, 315. Now imagine 220 to almost 80 rupees, right? 140 rupees in 4 hours. If you are going to take a short trade, which is basically selling an option, yes, you have to pay a lot of margin, but then you have covered your positions, right? You have, just because you have hedged using strangles, you have risk cover and you have profits. Now what is the profit? 140, let's say 10 lots, 500 into 140, it's 70,000, right? I'm just talking about this is a simple number. All right, so that is why I tell people that you should always go for selling options, right? Today was a very ripe day because the IVs were very high, and once the event passed out, you were able to make a lot of money. All right, so this is the strategy that I always, I'm an option seller, right? Primarily an option seller, and this is the reason why I do it, because I always tell people that you have to cover position, right? You have to hedge your positions. There has to be some amount of risk cover. Yes, buying an option gives you a lot of money, But then people in doing that, they forget there's something called as risk management. I am somebody who always prefers 10,000, 10,000, 10,000 every day, in compared to a 1 lakh profit and a 80,000 loss, and 2 lakh profit and 1 lakh 70,000 loss. I prefer, this is my bread and butter, right? So I always prefer 10,000, 15,000, 20,000, whatever amount I get, right? Because you have to understand that this is a job that is there for 6 hours. The rest of the time you get to do a lot of things. If you're a 9 to 5 job, working 9 to 5, 9 to 6, sometimes 9 to 8, right? There is no price that you can give to time, right? So this is a 5 to 6 hour thing. Rest is the time that I get to do things that I like, that I love, and you do not have, or you do not know what is the price of that extra time you have, right? So always cover your risks. Risk management is very important, and you will get such days, right? Today the premiums are very high, but you did not see something very important, right? I wanted you to see something very important here, is that there were no trades taken, and this is the most important thing. Sometimes taking no trades, it's far more important than making huge amount of profits, because stock markets needs you to be emotionally very stable, very mature, in the sense that there are certain events wherein no trade is the best trade. So you will get this kind of market behavior. Now let's say during this bi-monthly monetary policies, just see, all right, you will see this kind of behavior before the governor starts speaking. You will see some amount of increase in IV, and once he's finishes his speech, you will see the markets, the premiums getting adjusted. So if you ask me, I would not recommend people to take the trade till the time the person who is authorized, or who is responsible for the speech at least starts his talk. If he's done with all his talk and then you take a trade, yeah, that's fine. But do not, I personally would suggest you not to take the trade till the time that event has started. All right, sometimes it might work for you, sometimes it might not, but I prefer choosing a very high probable trade, which gives me some edge in terms of making profits. So I know I do not have all the glittery videos and things to show, but I generally prefer using Excel, and I hope by this I have made you understand that sometimes simplicity is the best thing that you can have in the stock markets. A simple Excel sheet can do wonders for you, right? So if you have liked this video, if this has assisted you in your trading methodology or trading style, do like this video. Please subscribe to my channel. Do provide a feedback, or I'll be very happy to listen to what you have to say, and do share it with your friends. On that note, please take care, and see you again. God bless you. Take care.